The broadcast is now starting. All attendees are in listen-only mode.
Ladies and gentlemen, welcome to this webinar of the International Fleet Managers Institute, the IFMI. My name is Steven Schroefs, and I hope that you had already a great day. I would like to start with a little bit explaining what the IFMI stands for. It's the International Fleet Managers Institute, and it's the training and expertise sharing platform for international fleet managers like you. And the IFMI also wants to stimulate forward action, and it triggers innovative thinking in car fleet management. Last but not least, the IFMI focuses on best practice sharing and interaction. And so also in this webinar that we will have today on the external factors impacting fleet management, you will have the opportunity to learn from two experts, and at the end also ask your questions in a Q&A session. So as mentioned before, my name is Steven Schroefs, and I'm the Chief Editor of Fleet Europe, and I will guide you today through this webinar. And first of all, I would like to explain a little bit the topic of today. And so the topic of the day is external factors impacting fleet management, from legal and tax to environment and CSR. Well, why have we chosen this topic? Because we see that fleet management is, let's say, not the most easy task, easy profession that you can have in the business, because it's impacted by quite a series of elements. So first of all, there is of course the corporate strategy. So in line with the company goals, you have to develop your international fleet management, and as a fleet manager, the strategic objectives will also define, let's say, the landscape, the environment where you can work in. But in that landscape, you have different elements of influence. First of all, there is the company culture. It can depend really on where your company is based, in what sector your company is active, what kind, let's say, of goals and philosophy that your company has. Then, of course, there are many stakeholders that you have to deal with. You know it better than I, that as a fleet manager, you have to find always the right balance, let's say, between different departments in your company. For example, finance, HR, legal, health and safety, procurement. And so they all have their own agenda, and they all probably also have their own goals. And so as an international fleet manager, it's your task to secure, let's say, employee mobility in the best possible way, but aligned also to the insights and the objectives of the different stakeholders that you have to deal with. Then there are some internal factors that you have to deal with, and then we come already to the part where we include, let's say, your own drivers. So let's say that the profile of your drivers will also define a little bit the way that you have to organize your fleet management. You can have young people in your company, you can have people that drive quite aggressively with their cars, and so there will be also an impact on fuel efficiency, on driver behavior, on safety, etc. So there will be also an internal aspect linked to your driver profile that will have an influence on the goals that you will define in your fleet management strategy. And then, of course, there are some external factors, some kind of elements where you don't directly have an impact on. And for example, we think about legislation, company car taxation, and CSR. And that is where we want to focus about today. So today we will have it about the external factors that can impact your fleet management. As you know, fleet management is a continuous evolving process, and therefore it's also important that you recognize and understand what will come to be able to act adequately as an international fleet manager. And today I have the pleasure to introduce you to two IFMI partners and experts in the field of external factors that can impact your fleet management. And so first we will listen to to Mazen al Haffar. He is Supervisor Tax and Legal Services at BDO. And afterwards, we will have some insights from Thor Konings, International Account Director for Athlon International. So, let me now introduce to you Mazen al Haffar of BDO, who will first explain you a little bit more about trends in taxation. So, Mazen, I hope that you are in the webinar.
I am, Stephen.
Okay, good afternoon and welcome. And so,
thank you.
Together with the audience, we are really looking forward to what are the trends, let's say, in terms of company car taxation. So the webinar floor is yours.
Thank you, Stephen. Thank you all also for attending this webinar. So my part will be around taxation, as Stephen has explained to you. I will first start with some taxation trends in respect of company cars. The taxation for these vehicles tend to be more and more CO2 driven, especially in Europe, where around 20 countries have a CO2-based taxation scheme. There is a trend also to be noted which is a shift to NOx taxation. Indeed, after the Dieselgate, the trend has significantly accelerated towards a taxation based on other criteria than CO2 only. Diesel has also known an increase in taxation, which makes it, for the moment, probably less advantageous than petrol or other alternative powertrains in most of situations. A recent Belgian study has shown that diesel engines can only be cost efficient as of 35,000 kilometers per year. Favorable taxation for petrol and alternative powertrains are more and more implemented. Indeed, the countries tend to tax favorably the greener vehicle and to grant incentives such as parking spots in city centers, the use of dedicated lanes such as bus lanes or taxi lanes, access to restricted area, etc. in major cities. Also, additional tax deduction are granted to green car, or it can also be a waiver of the circulation tax or of the registration tax, for instance, etc. All those tax benefits, those tax reliefs, let's say, are granted by policymakers in order to promote and to sustain the use of greener cars or alternative powertrain. It can also be noted that over the last 5 years, green cars on the roads have almost doubled, reaching 2.7% against 1.4% in 2011. So the most optimistic will say it has almost doubled in 5 years, but it remains, let's say, very marginal. Also good to be noted is that when more benefits are granted to alternative powertrains or greener cars, you will see an immediate, almost immediate impact on the registrations due to the combination of incentives that are offered. You can switch to the next slide, Stephen. So the situation in view of taxation rules remain very complex across Europe and across the globe as well. These rules are very far from being harmonized, and they put the fleet managers in a very difficult position to monitor the complexity of the various legislations where they are operating. Some member states in Europe do not have a CO2 taxation scheme at all, meaning that there is still much room for changes and also for improvement. Although the intention of governments and policymakers is set to focus on green, there is no fixed rule in view of the entire life cycle of a vehicle. Legislation can change many times in the life of a vehicle, and indeed policymakers have a short-term view, while registration taxes, circulation taxes, benefiting kind taxation are all defined at country level. And even at country level, differences can arise. For example, a congestion charge is levied in London Centre, but not in other cities in the United Kingdom. So the region, the provinces, the districts, etc., can also make their own rules. And this is a trend that goes along with the strong demand of some regions, provinces, etc., to become more and more autonomous and self-governed. So, of course, this increases complexity and volatility a lot. As said before, an important factor is the volatility of taxation rules. There is a short-term vision. Subsidies are granted, incentives are granted, while short after that, there is a focus on budget again by policymakers and on the economic aspects. As a consequence, it is very, very difficult for fleets to have a long-term view and a long-term policy. So for the trends and future developments, well, something that we see more and more rising now, which is kind of new, is a strong demand for mobility budget. But for this matter, the taxation aspects are not as clearly defined as where it comes to taxation of cars, bikes, public transport tickets, etc. So there is still a lot of gray zone in respect of mobility budget. On another topic, also IFRS 16, which will enter into effect as of 1st January 2019, will come into play and will bring changes in the fleet world. At a glance, I can tell you that this IFRS 16 sets out the principle for the recognition, the measurement, the presentation, and disclosure of leases for both parties to a contract, so the customer and the supplier. This topic will be one of the features of the next session of the IFMI in Barcelona and the Global Fleet Conference in Brussels, so I'm not going to speak about this long right now. So there is still much of uncertainty how this IFRS 16 will be implemented in practice. So to conclude, we can say that compliance with the rules is a huge burden in terms of payroll, fringe benefit calculation, the administrative impact in order to manage all this is also considerable for fleet managers and generates high cost also in terms of taxes. So definitely the actual challenge is to monitor closely all this because this factor, if not accurately managed, can really become problematic. I'm finished. Thank you very much for your attention.
Thank you, Mazen. Thank you for a little bit explaining some trends in company car taxation on the European level, although that we have seen that there are still many country differences, and we will come back later on that topic in the Q&A. So as a participant, you can ask your questions for the expert speakers using the chat function in the webinar tool, and then at the end of the webinar there will be a little Q&A session in which we will select some of the questions that were asked, and so that our experts can also give insight on those questions. So we will now move further. We talked about taxation. We will now go to everything that has to do with CSR, which is also a challenging topic in terms of fleet management, or it can be, and therefore we invited Thor Konings of Athlon International, who will first explain some elements about the impact of CSR, and then he will also outline how the fleet management partners today can support you with managing those external factors for your fleet management strategy. So Thor, are you with us today?
I'm with you. I'm with everybody, Stephen. Good afternoon.
Good afternoon. The floor is yours.
Thank you. Thank you, Mazen, also, and good afternoon all. Thanks again. Well, after discussing the external factors, taxation and legislation, it is now time to discuss the third external factor in this webinar, CSR. CSR, as you will know, stands for Corporate Social Responsibility and is defined as the belief that a company should take into account the social, ethical, and environmental effects of its activities on its staff and the community around it. In our industry, in particular, the environmental effect of having and managing a car fleet and alternative mobility solutions is referred to. Having a CSR strategy and acting upon it in mobility management is meeting stronger demands by the general public, your customers, the board of directors of your company, and also your employees. As a fleet manager, you have to deal with the sometimes opposite interests of all these stakeholders, as Stephen already mentioned in his introduction. And there is a lot more going on. All original equipment manufacturers, OEMs, they are constantly developing in this area. With every new model launch, the environmental impact is a key topic and a differentiator. OEMs are strongly focused on developing lightweight design, aerodynamics, alternative drive systems, eco-chip tuning, speed limit systems, and telematics. As a result, the average CO2 emission reduced by 5% over the last few years. And due to its innovation, the developments in self-driving vehicles, like the Google driverless car, are getting a lot of publicity. As a result of the variety of players in this field, in the news we get different messages on a daily basis on diesel, petrol, hybrids, full electric, and hydrogen powertrains, let alone the current scandals around this theme. Local governments and tax authorities are trying to implement policies leveraging financial and environmental impact for the government, the industry, and the employees. But ever so often, these policies are adjusted due to unexpected financial or environmental effects. The 75,000 newly sold full electric vehicles in Europe in 2015, like for instance the Tesla, the BMW i3, and the Nissan Leaf, they are expected to double in 2016, whereas plug-in hybrid vehicles, such as the Mitsubishi Outlander PHEV, the Volvo plug-in hybrids, those sales, for instance in the Netherlands, are estimated to decline by at least 40% as a result of adjusted taxation. The Dutch government decided to adjust the taxation for the plug-in vehicles because of the limited range on electric power, the lack of charging stations, and lack of discipline of the drivers to charge the batteries. And these cause heavy vehicles to run on petrol most of the time. Most European countries are behind target on realizing the Sustainable Development Goals, or SDGs, especially the ones related to climate change, as agreed in the United Nations. Of most concern is the increase in absolute numbers of CO2 levels due to emissions from fossil fuel combustion. Considering the carbon pollution from transportations, which accounted for about 24% of the greenhouse gas emissions worldwide in 2015, sharpened regulation and legislation and the use of the tax mechanism to motivate or demotivate certain vehicles and combustion types is evident to have a stronger impact. Well over 200 cities in Europe already have, or soon will have, a so-called environmental zone, which will impact the access of your drivers in these cities. We're not talking about some small and insignificant places. We talk about cities like London, Berlin, Hanover, Malmö, Stockholm, etc. In order for your drivers to keep having access into these cities, you will have to adjust your policy and your vehicle choice. Logistics companies like UPS, FedEx, and DHL, they were already forced to take measures, for instance related to low carbon fuels, alternative fuel vehicles, and improved fuel efficiencies to ensure that they can continue their business activities. Up to 10% of their fleet already qualifies as green. During the full-day IFMI live session in Barcelona in November, the IFMI partners and all participants will elaborate further on this important topic. And we will look also at how technology can help us in this matter. Increased car connectivity and self-driving vehicles that are currently being tested combine the external factors, taxation, legislation, and CSR in an interesting way. So what can the IFMI partners do for you? Well, your partners have the expertise, and through their network, they retrieve country-specific insights in taxation, legislation, and CSR-related matters that could potentially impact your business. The information is out there, and through workshops, seminars, forums, this information is disclosed to you. We advise you to use the IFMI partners to review your car policy, to verify if your policy is still up to date in terms of selected OEMs, makes and models, and fuel types. Somewhat more behind the scenes, the IFMI partners are part of various national and international networks. Through influencing and lobbying, they look after the interests of all stakeholders in the leasing market. As we learned from previous IFMI sessions, for instance the one on monitoring the TCO, your leasing companies retrieve and report management information based upon which you can take decisions on how to move forward. In order to reach your CSR goals, your drivers can be trained in eco-driver trainings. Live training as well as interactive training supported by telematics to stimulate your good driver behavior have proven to be successful in reducing costs up to 3 to 5% of the TCO, depending of course on your company and your mobility profile. But all good and all, what could be next steps for you? First of all, we have to realize that dealing with all these external factors is a joint responsibility between you, your suppliers, and their networks. These factors are here to stay, and their impact on your business model will only become more dominant. Our advice is therefore, be alert. Be alert in gathering as much information as possible from your networks, your peer groups, and your IFMI partners. Furthermore, we advise you to be flexible so you can adopt your internal stakeholders, can adopt your policies and procedures to change. And finally, we recommend that you have a continued focus on your total cost of ownership, in which the impact of the external factors can be monitored and managed. Thank you for now, and I would like to hand over back to Stephen again.
Thank you. Thank you very much, Thor, for your insights. Thank you. We will now come to, as you can see on the screen, to the Q&A. So if you have a question for one of our experts related to taxation, legislation, CSR, international fleet management, it's time now for you to ask your question so that we can also ask those questions to our expert speakers. I have a first question. The first one is one for Mazen. Mazen, it's linked a little bit to what you were discussing. In fact, you said that, well, we see that although that we are going, for example, in Europe, more and more towards a taxation approach where CO2 becomes more and more important, and perhaps in the future also NOx will become an element in the equation, that we can't speak yet of an international approach. The question is, does it then make sense to, at one point, at a certain level, to deal with taxation on an international level, or do you say that, well, Stephen, if we look at the situation and what will happen in the near future, it's perhaps better that you do that on a country level. What is your advice?
Well, you are correct to say that in a short future and even a medium future, it will remain very local, I believe. If you take the example only of the European Union, there are so many discrepancies. Bulgaria, Hungary, Poland, Italy, Slovakia, Estonia, Czech Republic, and there are others, do not have a CO2-based taxation scheme at all. The EU is committed to a 20% reduction in CO2 emission levels by 2020 compared to the level of 90. Will this be reached? I have doubts. As long as there will not be more than a volunteer, but also, let's say, formal obligations for countries to comply with certain goals and to achieve them, putting in place the right tools to achieve them, I think taxation will still remain very, very disparate across Europe and across the globe also. And it's not because the COP21 was a real success that putting this in practice will also be a success.
Mm-hmm. Okay, another question also for you, Mazen. You also talked a little bit about that we are slowly but surely moving also from legislation perspective towards, let's say, the mobility approach, the alternative mobility situation. Can you explain a little bit how you see that movement? Do you feel that in Europe and perhaps also on a country level, there is really now that necessity and also that willingness to create a fiscal tax environment in which alternative mobility, integrated mobility can be streamlined and can be implemented?
Yes, I believe so, because the demand for alternative mobility package and yeah, to replace company cars or other mode of transport is a demand that comes from the users themselves, from people who used to have a company car and rather get a mobility package also for congestion problem. It has become, in major cities, congestion has become really, really a big issue. So I think it's really time now for policymakers to look at this question and make the rules in terms of taxation of mobility package much more clear than what they are now. And this is also linked with the increased technology and connectivity that we have now. The mobility package, we used to have the classic ones, you know, the bike, the train tickets, are no longer really suit to the needs of the people. What they want now is an all-in-one package where they can use a shared car with then a shared bike, whatever, go in city centers with green cars that are shared and find a parking spot through an application and so on. So this matter is really something that needs to be looked at, and it's not quite there yet at the moment. We do not have...
What is the biggest hurdle for you in reaching that for the countries? What is the biggest, let's say, hurdle, obstacle that the countries have to create really that kind of an integrated mobility taxation?
Well, there are different opposite interests, and as long as you do not make those interests meet, it's difficult to reach really a fair agreement, both for the state who will cash in the taxes and also for the user who needs to see a real benefit in this, not only from a mobility point of view, but also from a taxation point of view, of course. It has to be advantageous as well, so work to do.
Mm-hmm. Okay, a question for Thor. I think it's Thor, indeed. In your presentation, Thor, you mentioned that if you look, or was it Mazen? I don't know. We should see. The question is related to the fact that diesels, there is, let's say, a tipping point at 35,000 kilometers to be, let's say, break even, that they become really beneficial. I think that it was related to Belgium. The question is, how did you arrive at this mileage, and do you see also a kind of evolution for the future?
So your question is, how did the IFMI partners arrive at the tipping point of 30,000 kilometers?
I think, yes, in Belgium, I think it's now...
Yeah?
I think in Belgium there is now a figure that it's 30,000 or 35,000 kilometers that it becomes interesting to drive a diesel car. If it's less, then you have to watch out. So, and the question is related to that, and how do you see that evolution?
That is one of the added values of the IFMI partners, that we have all data. We have the expertise from from all makes and models, and from the powertrains, but we also have to consider the oil price and what that does to the price of diesel, the price of petrol, and of alternatives. So we take all that into account, and we would advise the participants in this webinar to frequently check if those tipping points, so to say, are still valid. Because saying that it is 30,000, that might be correct for now, but in a few months' time, that might change. It might go up and down. As a trend, and I would invite the other IFMI partners to comment on that, but as a trend, we've seen over the years that tipping point gradually coming down from 40 to 35 to 30,000, and I've seen quite a bit examples in several countries where that tipping point is already lower than in Belgium. So already as of 25,000 kilometers a year, it would be more beneficial to run a diesel car, where that was unheard of a few years ago. Does that answer your question, Stephen?
Yes, it was really good that you could give that advice. A question linked to that, and perhaps it's also Thor, you can start, and I will also open the webinar floor to Nathalie de Vries of LeasePlan. She's also an IFMI partner who can perhaps react later on. It's also linked to Belgium and also the Netherlands, and the question is, can you then confirm, based on what we have seen in the presentation, that it's perhaps not anymore really convenient to lease plug-in hybrid cars with the reduced incentives that are going on in the Netherlands and in Belgium linked to those type of cars?
Yeah, I can already give a start on that one. As I mentioned in my part of the webinar this afternoon, I touched upon, for instance, the example of the Mitsubishi Outlander, the plug-in hybrid vehicle that met a very, very strong demand over the last year. Record sales, and that was because there was not only there were many combined tax favorable solutions that would apply for selecting this type of vehicle, but that would change. As I said, the government has adjusted the thresholds for CO2, and as a result, this car suddenly becomes quite expensive because that tax benefit is reduced, and therefore we expect that sales moving forward are, I mentioned 40%, but it's likely to be a lot higher, the decline in sales for these vehicles. So it is a challenge for the OEMs to constantly predict, because developing a new car, developing a new powertrain, and especially for a small market, a relatively small market as the Netherlands in Europe with its own tax regime, is quite a challenge, of course. Mitsubishi was very successful last year, but that situation will change drastically moving forward until they have found another solution and can take the benefit of having the perfect model for that perfect tax environment in that country. Nathalie, anything to add?
I will open for Nathalie. So Nathalie, you are now in the webinar room. If you want to add something, please do.
No, I do agree with Thor. I think that having made those changes to hybrids and EVs, or more specifically the hybrids, we see that from a taxation point of view, these cars got less attractive, and especially from a benefit in kind tax point of view in the Netherlands. But my recommendation would be to always select vehicles from a total cost of ownership perspective. I mean, it's true that from a tax perspective they got less attractive, and I must admit from a TCO perspective they may not always make sense, but if you would be zooming in on particular driver groups with a specific commuting distance and maybe driving in a specific area, the total cost of ownership of hybrid vehicles and EVs get more attractive. We have seen that hybrid vehicles were driven from a benefit in kind tax point of view by a variety of drivers, and that the car was not always used in the way it was meant to be used. But if you would be zooming in on particular drivers and employee groups, I think it could make sense, but not as a standard maybe across the board for your employee base.
Okay. Mazen, linked to that also an answer from you, I hope. The question then linked to the previous question is, from a tax point of view, then it's perhaps better that you keep your, let's say, old electric and hybrid vehicles as long as possible in your fleet so that you can perhaps also benefit from the old incentives that were released on those kind of vehicles. Is that correct, or does taxation already also have invented some ways to avoid those kind of reasoning?
Well, no, not that I'm aware of, but as said before, legislation changes quite rapidly, so what is true today may not be true tomorrow.
Okay. We have another question also for you, Mazen, and I'm going to read what we received. As governments react in really short terms, let's say, in terms of taxation, for example, moving now more and more to NOx, where before it was CO2, they are adapting the taxation around CO2, they are inventing new taxes. When would you see the tipping point when they will begin to tax things like electricity, this with the introduction of continued and increased electrification of vehicles? Do you have already heard about that? Do you know a little bit more about that when they are going also to look at that the electricity that you will use for your vehicles will be taxed additionally?
Yes, you are right to say that. Well, there is no planning, so definitely this is something that will happen the more we move towards electrically powered vehicles and abandon the classic engine with petrol or diesel. Of course, there will be an increase in electricity taxation in order to fill in the gap left by petrol and diesel. When will this happen? I don't know.
Okay. A question for Thor. Thor, Mazen mentioned that also in the future the introduction of the new IFRS and lease accounting could have an impact, let's say, also in fleet management. In what way can you, let's say, guide your clients in order to those changes that will come up?
A good and very relevant topic at this point, even though we have to realize that IFRS, we have been talking about this topic for many years, but now the decision has made, January last, that IFRS, the new accountancy rulings, they will apply and they will be effective as of the 1st of January 2019. Now, to some, it may seem as, well, 2019, that's still so far away. It's only not even halfway through 2016, so, you know, I've got plenty of time. But, and I'm sure that that will be discussed also during the live session. Now is the time actually to act. Now is the time to take steps, because yes, the new rulings will be effective as of the 1st of January, but to some extent, quite a bit of an extent, the data, the cars that we put on the road right now for a 3-year contract period, for instance, these cars, they will be affected by the new rulings retrospectively. So it is important that now we start thinking about what do we need to do as IFMI partners for our customers, and what do our customers need to do? What actions should they take with their tax authorities, with their banks, with their accountancy firms? And it is our responsibility, I truly believe, to consult our customers on what is coming. So it is definitely an external factor. It is definitely going to impact all of our industry. Maybe on the short term, only for those companies that do fall under the IFRS or GAAP regime, but it is only a matter of time until all other companies will be impacted by this external factor. So again, to summarize, reach out please to your IFMI partners, join the live session in Barcelona to hear a lot more on this very important and very relevant external factor.
Okay, to end, just another question also linked to that. There is someone that wants to know that can we then expect with the new IFRS rules that will come into play in January 2019 and the impact that it will have on the balance sheet of companies that at the moment lease their cars, that perhaps this will have a negative impact, let's say, on fleet vehicles as a benefit for the employees. What do you think, Thor? And perhaps afterwards we can also ask Nathalie to comment.
Okay, well, yeah. If we do an assessment and we look at the advantages of leasing over having and managing a fleet by a company itself, then there are multiple factors. Let's say 10 unique selling propositions in favor of leasing. From those 10, after the new IFRS rulings are adopted, 8 of them, let's say, are still as valid as they are today. But yeah, maybe 2 elements, they will be affected. The one thing is, of course, the impact on the balance sheet and the profit and loss account. The second one is the inevitable complexity, the administrative complexity that this new ruling will bring. So yes, that will have an impact, and of course we need to find good solutions for our customers to reduce the impact as much as possible. Yeah.
Okay, Nathalie, do you want to add something on what Thor already mentioned?
Well, yeah, the lease accounting is worth a webinar in its own, I guess. I agree with Thor that it will be merely impacting the accounting of how leases will be shown in the balance sheet, and that triggers a data stream and a data requirement. But then again, it is heavily dependent on how big an impact the fleet has on your balance sheet. I mean, the lease accounting does not only apply to cars, but also to real estate, machinery, and everything that a company is leasing. So if you have a small balance sheet, but if you happen to lease your cars and your real estate, then this new accounting rule will have a heavy impact. but that applies to all companies in all industries. So I think we will see a shift in how banks and accountants will evaluate leasing altogether and the impact on the balance sheet. But yeah, I think to bear in mind, it's merely an accounting impact, and it will merely trigger a new requirement for data to reflect the balances in the right way on the balance sheet.
Okay, thank you very much for your insight. We have run out of time. There were still a few questions that were asked. We will try to look for answers and then contact the people that asked those questions directly. I would like to end the webinar, in fact, with the mentioning that there is a recorded version that can be found in the beginning of next week on our dedicated website for the IFMI, where you can also find the program for 2016. It's ifmi.fleeteurope.com. You will receive a little satisfaction survey with some additional questions, very interesting for us, but also for you to fill it in and send it back, because this year we will ask you some questions to base also the live session that we will have on the 15th of November in Barcelona. We will base some of the topics on your requirements and on your needs and on what you indicate in the survey that you will receive after this webinar. So please fill it in and send it back. And then, as mentioned, the next IFMI session will be a webinar where we look at the internal factors impacting fleet management. So we will talk much more about safety and driver behavior. That will be on the 27th of September. And then on the 15th in November, we invite you in Barcelona for a full day training session on successfully addressing trends in fleet management. So thank you very much for your attention, and I hope meeting with you again in the next IFMI session. Bye-bye.